Okay, if somebody can let me know if they can hear me, that'd be great. Just type it in the chat. Yes, you can hear me. That would be awesome. If somebody can hear me, please let me know, because I won't start talking until that. All right, let's re-engineer today. So today I didn't do a live stream in the morning, fell asleep. Been having a couple nights of just crappy sleep, so slept in, woke up, panic, had to take my daughter to school earlier because she has like an activity she does at school that requires her to be there at 6:30. So the morning sessions might be hit or miss, but I still did it and published it in the newsletter. Okay, start yapping. All right, so remember this chart is a swing trader chart. We use it for multiple reasons, but basically to see the higher time frame momentum, right? That higher time frame momentum will let us get a clue on, are we expecting the low of the day between 5 and 11 in the morning, and the high of the day between 1500 and 1600. These higher time frames momentum will let us know if we're overpriced. Do we expect, tighter daily range, volatility contracting, or do we expect it to expand based off of the week of the month, right? So starting on the daily, which is this chart right here, way above previous month 50%, yes. Way above NFP Friday, yes. Then we expect the month to close higher, right? Meaning we're looking for the low of the day right here, right here, right here, right here, right here. And if you're on my Twitter, I just posted a video on 3 videos going over exactly this, right? Going to the weekly chart, using this 5 EMA as a constant variable to measure around. We usually, from a statistical standpoint, get between 2.5 and 5% before we get overextended for whatever news, catalyst, geopolitical nonsense, earnings cycle nonsense, economic news nonsense. Usually that's a good spot to start measuring for the month. Are we going to go into a monthly slowdown, a quarterly slowdown, or is there a complete change of character and where these markets are going? Right. So far, we have not even, for this month, we made it to 2.32. So we know that whatever the market's pricing in is very tightly contracted volatility. And so we have nothing to worry about. We're either going to expand up or we're going to expand down at this point, because we're above previous month 50%. And at the Friday, we expect us to expand up the rest of the month, right? And then locking in the low of the week, right? We put on turn that off. We put on the Sunday 18 to 1900 hour range and the Tuesday 9:30 to 10:30 range. When we get above 1, that's an alert that the low of the week or the high of the week is in. When we get above the other, that's a confirmation. Right now, we swipe below Sunday 18 to 1900. We came up here, found rejection, came back down, and now we've swiped above it, and that's where we're currently at as we speak in Asia, right? So giving us an alert that this has a potential of being a possible low of the week. For that to be confirmed, we need to get above this range right here, right? I turn on this premium kill zone pivot by TFO, right? There's a screenshot for you, right? And everything broke, yay. And then what I'll do is I'll put on that, and what it does a look back of, he has this attached to EMA and standard deviations, and that will give me the 5 previous, and this will update throughout the days of the week going forward, right? And it'll show me these are the 5 scenarios that synchronize with the standard deviations we've already hit, and we're in relationship to the moving average that he has it synchronized to, right? So that'll give me a general idea of what to expect. And like looking at this right now, we get rejection. 4 of the 5, right? We just go below, right? And this is not with Monday locked in, right? Once we get above here, then we'll come over here and we'll lock in Monday as the low of the week, right? We don't have that yet. So right now, this is the 5 highest probable ranges and directions that we can expect. So with that being said, this chart right here is the swing trading chart, right? It's my higher time frame momentum. It's my decision making chart. It's basically for you as an intraday trader, you're trying to identify the market condition. What are you expecting the low of the week, the low of the day, between 5 and 11, et cetera, et cetera. Now, what we do is we come on over to this chart right here, right? And we do this at 5:30 in the morning. And good news, like my database that I use for this is almost complete, and they'll come with the annual subscription plan of my service. So for $100 a month or $100 a year, only a year, like for the year, like you have access to all this data, right? And that's only because of the only reason I'm charging is because of the amount of work that comes with that and the amount of data. All right, so with that being said, first thing we do, we reset to start. Come over here. Make sure RTH is not selected. And you want to make sure it has 4,180 data sets, so days. So this is what we had projected. 7 to 11:30 and 11:30 to 16:15 are what we're trying to project. Through the day, like I do the same thing with the 7 to 8 o'clock range, and then, but not, because I'm not live and I've already posted my newsletter, this will be ever moving, right? So it would have been like that once we get out of the 7 o'clock to 8 o'clock range. Right, so now we're going to delete this whole thing, just like that. And we're going to do step 1, which is always put our variables in. Right, so right here's the checklist. Put in Asia and London variables, right? And these times will change next week when I get the new database, right? So this is the range for Asia. This is what it did until London. So this would be a short because it broke out of this side of the range and it stayed short until London. So this would be a short true. So right here, I'm going to go over here to short, and I'm going to go to true. London, as of right now, right? What's up, Jimmy? London right now will be, it went short, and so that would be a short true. All right. So that's step 1, putting those variables in, right? Now what we're going to do is we're going to put previous day highs, lows, probabilities on, and the previous 12-hour high and low probabilities on, right? So starting with previous daily highs, we come over to this indicator right here. We go to daily, put it on our charts. I don't know why I hate these opening closes. I don't need them. Just a random blue line. Oh, this is the previous day high. So we're going to put that on here. I'm just going to put previous day high. Come back to our data set. which has the Asia and London variables in it. And we can see it has a 20% probability of being touched. Right, so we're going to put 20%. Put the previous day low. And we see that has a 41% probability of being touched. Right? Now we're going to put our 12-hour cycle on. Which is from 1800 high to 06 low, right? Which is down here and up here, right? And remember over time, over the last 4,000 days, when the Asia highs haven't been taken out, it has actually an 80% probability of being returned to. It's like actually a 91% probability. So the fact that I saw these Asia highs untacked, I already know the statistic by heart because I back tested it. Right, that's always a key indicator in my mind. And it's something I talk about all the time on here. Right, so now we're going to put our previous 12-hour highs and lows on. We can see the previous 12-hour high has a 50% probability. And that's based off of just what Asia and London has done. We see that the low had an 86% probability. So we'll leave that alone. All right, and those are my structure-based probabilities, right? I usually will put the mid. Actually, yeah, we will put the mid because all these times are between 8 and 12. So the previous day mid, right, between 8 and 12 has a 44%. I'll put my London OU line, meaning like once we breach this, that's the alert that we're going to take out London's highs, and that is the confirmation that we're coming up here, right? So now we have our structure-based probabilities on based off of what Asia and London have done, right? Now we're going to put the high of day, low of day in, right? From a probability standpoint, we can see the low of the day, you see this big spike right here, 0.70, and then you can see this big spike right here around the 9:30 to 10:30, right? So we're going to come down here and we're going to start at Globex open, and we're going to go 0.70 right there, 0.70%. That's the first part of it. Going back to here, we can see that this is 0.10. So we'll take our price range tool. We can go to 0.10. Meaning that the low of the day, previous day low, we're going to have to take that out to get there. Right? So we'll put low of day, 0.70% to 1.1% between 9:30 and 10:30. And then we'll put our high of the day on. which right here, you see from 0.3 to 0.49 and happening at the end of the day. This is the end of the day, right? This is 6 p.m. So we'll say between 3 and 1500 and 1600 is when we expect the high of the day in. Start at that Globex open, going up 0.3. 0.3 to 0.49. And then we said this high of the day, and then we said the highest probability time for that was between 15 and 1600, right? All right. So now we're going to put our time-based probabilities on, right? Which are going to be midnight, settlement, and Globex open. We can see midnight is this pink line right here. You can see Globex open is right here where this gap is. And then for settlement, I just go right here on Friday. Now look in the top hand chart where it says C, and I can see 20483. This is the actual settlement price right here. And I hover over the previous day. 20483. Go back to my 10-minute chart. 20483. Right there. So now I have my time base. So we've put in the Asia and London variables, what it's done. We put the high and low of the day probabilities in. We put our structure-based probabilities in. We put our time-based probabilities in. And now we put our projection-based probabilities in. From a trading standpoint, we know that even though the variables of what Asia and London have done have made these low probability variables up here, we also know over the last 2,000 days, actually 4,000 days, this has 3,000 of the days returned to this Asia high out of 3,000 days. So that we're going to pay attention to, and I'm going to walk you through how I was able to identify that early today. Right? All right, so now let's put our projection-based probabilities on. Come over to the VET. Turn the VET on, and these are all free indicators. Right? We can see the only probability to the downside that weren't hit was 8 and 12.5, right? So we're going to look for -8 has a 53. So let's put that in. And then we're going to put 12 in. Which has a 25%. And right now we have our time-based and our structure-based probabilities. And now I want you to draw out the scenarios for you. So scenario 1 is London high can't be breached by 8:30, 9:30, and 10:30. have a probability of being above London high, below, this should be above London low, below London's high, or engulfing it. All right, and then 1030 on. All right, and that's the scenario that we have right now, is that by 8:30 this continues to go down, and then 8:30, these are the probabilities that you see on the chart, and these are the probabilities you see right here. All right, so if that's the case, come in right here, we can see that this is from 2 o'clock to 8 o'clock, the highest probability structure base. So we're going to drag this out to 8:30, right? And we can see that from a structure-based standpoint, this is the highest probable outcome that we're expecting, right? Now we're going to start filling out these probabilities for 9:30 and 10:30. All right, we can see above London low has 18%. We can see below London high has a 60%. We can see engulfing London has a 21%. And then we can see the highest probability after 10:30 is the long side by 6%, but 50% overall, 51%. So we're going to put that in there. So now we're going to go with scenario 2, that we breach London high, 9:30 to 10:30, above London low, below London high, engulfing London, and 10:30 and on. Right? So let's change that variable. Right? And now we can see that everything shifts probability-wise. Right? For our time-based probabilities, right? Settlement hit went up, midnight went up, Globex went up. Previous day hot, previous 12-hour went completely up to 82%. It was at like 20%. Previous day highs went up. Previous day's lows went down, right? Which is why I tell you, pay attention to the scenarios, right? So now let's put those scenarios in. Along with your projection-based probabilities. Those all flop. They still stay high for the down ones, but -8, which was at 50%, is now at 30% if we breach that London high. All right, so now let's put that in there. We can see there's a 55% chance above London, 55% chance long at 10:30, and all the probabilities shifted. So we're going to put those in. You know that this had a 55% probability. We see that this had a 17% probability now. And we see that this has a 27% probability. And then that 55% after 10:30 long. All right. So those are our two scenarios, right? So let's put them on the chart. This is the scenario if we breach London right there. This is the scenario if we don't breach London. Either way, what it tells us is that the move is going to happen in the morning and the afternoon is going to be a chop fest, right? So those are two scenarios. We'll put them right over here with this stuff. And we can see, we'll talk about this in a minute. All right. So now we're going to move on to the last step. So we did our Asia and London variables in the beginning. We put our high and low day probabilities on, our structure-based probabilities on, our time and our projection-based probabilities on. Now we're going to put our possible New York scenarios. We're going to put our distributions on now, right? So turning the VET back on, if we see that the average daily range is 284, average 10-day range is 284. All right. We see that on a Monday, 1800 to 230 is 0.49. This actually should be on a 5-minute. 0.49, 230. We can see that 230 to 7 over the last 22 Mondays was 0.52. To 7. And this changed because this was different this morning, so it must have updated off of today's price. So we'll put it in anyway. And this is from 230 to 7. We can see that 7 to 11:30 is 1%. And we can see that 11:30 to 16:15 is 0.9. All right. And off. So this is our, as of right now at 5:30 in the morning, this was the highest probable, right? So if we look at scenario 1 and 2, we see that if we stay below here and we can't breach this London midline and ultimately lead to this London high being taken out. If we do that, then this moves up to like right there. And then this moves up to right there, right? But for now, it has to stay like this. Let me make this right. 1130. This goes to 1600. Here we go. This comes over here. This comes over here. Right? We can see that this is where we'd be, and that we'd sit here and chop all around this area with a spike up. And these aren't to scale. We know that right now, we're either going to go up and then go sideways, finish the day still stronger, right? We're going to come up like such and finish the day higher, looking at the dark blue shaded area, right? So we know that those are the two scenarios, right? So now we put on our live price, which is over here, right? These are the hourly boxes to make sure that we're still in a trend, to make sure that momentum hasn't shifted or any of that. As you can see, we opened this hour at the previous 50%. We opened the hour at the previous hour 50%. It's time to make a decision. Is it going to continue going down, or is it going to go up? Ignore this 930. This is the 930 from Friday. All right, right there. This is a blue shaded box. Is minute 5 to minute 9. You see that we're rejecting it. You see that we're rejecting it, and now we're stepping below it, and we're going to expect for it to like come up in here and then reject more, coming down ultimately for this statistic right here. That's 87%, which is the overnight lows. Right? So I stepped below it, found rejection, coming down to 87%. New hour opens, 7 o'clock hour opens, 5-9 box developed, couldn't get above it, stepped down, found rejection at the midpoint, took out the lows, which we already took out right here, right? You took out the lows of the previous hour right here, the first few minutes. And so you're just looking at this point, are we going to be able to feed above this previous hour in momentum shift? Or we couldn't even get out of the 5-9 box without rejecting it, right? All right, so now we're paying attention because we're at that 0.7 from statistics. Remember, we looked at the low of the day, and we saw that the highest probable low of the day was going to be at 0.7% off of 1800. So we measured from Globex open all the way down 0.7, and this is the top of this green box, right? We're paying attention to that. All right, so now new hour opens, we're at the 50%. From a fractal standpoint or whatever standpoint, when you see that, you know it's about to make a decision on what's next. Is it going to go lower or higher? Right? We're testing that 50%. Now we've stepped over the previous hour 50%. Developing the 5-9 box. Right now we're paying attention. This is the open. The wick's right up in here. So we're wondering on the hour, are we just coming up to test that wick and then reject lower? Or is this a true step above the previous hour? Find footing to go higher. We're at the low of the day zone. So it could happen. We're just waiting for response. Bam, right there. It happened. Right? We take out previous hour highs Now we're expecting it to pull back, backfill into the 5-9 box, they head higher. All right. Where are we from statistics? We see that when you see a move like this, an hourly shift up like this, and previous day's low was 20 handles away, right? Makes you think, like, was this just all right? So it makes you think, like, was this just going into the daily wick and rejecting from it, or like, why didn't it reach down there? Why didn't it have enough strength to take out previous day's lows? Does it need previous day's low, right? 9 o'clock opens up, we take out previous hour high, can't get down to previous hour low, right? We're paying attention to this London OU line, right, to tell us, is momentum shifting and all that. My 5-9 box didn't update. All right, that's nonsense. I need my 5-9 on the 930. There we go. All right. So this 5-9 box in the 930, you'll notice a lot of the times the move that happens at 930 will be a false move or a Judas for the ICT traders, right? So when I see that we're above the 5-9 box before the open, it makes me think, okay. All right, 930 hit, right? Now I'm paying attention to this right here, right? Where are we in relationship to the 930, right? What did we do? We came up and took out London's high. So that puts us in scenario 2. Remember? Right? And remember these AJS had a 90-something% probability. So scenario 2 had this dollar structure, right? So we're going to come over here to our database. We're going to say engulf. We're going to say London is 100% broken. This is wrong. This needs to be inverted. London's inverted. And then this is engulfed, right? Inverted. Ew, okay, so I am supposed to invert it. Thank God for nerds. So that's what we're expecting. Anyway, back to price action. All right, so 930 is developed. We breached our line in the sand that said probabilities will now shift to the upside by breaching this London OU and then taking out the London high. So now momentum has shifted, which is confirming this low of the day, or high likelihood of low of the day, which happened at 7:30. Probabilities told us 9:30 to 11. Right there. Oh, shit. We can see that right here, we came down, found rejection around the 50% of the 930 and around the 50% of the current range, right? Ten o'clock opens up, right? Can we get below this previous hour midpoint? Right now, you've been in a 3-hour trend to the upside. You're trying to see continuation. Because remember, we had those Asias, which had a 91% probability of being returned to. We take out this H4 momentum is now up, right? H1 momentum is now up. Now we're just paying attention. All right, we're paying attention to how price responds in this area around the 930. Because remember, if you did this playbook exercise that I gave you guys, where you're determining what type of RTH conditions you have, right, you'd realize that I pay attention to two things as this thing's developing. 930 price, and then the midpoint of the range as it's developing. And the moment that's broke, right, like I'm making decisions around that. However, right now, when we're above the 5-9 box, I'm paying attention. Do we find footing in the 5-9 box? This shows no footing, so I'm thinking, do we find footing around here? We breached that. Are we taking out the lows? How many times are we swiping back and forth the 930? Right? We already had a momentum shift. We already hit the low of the day almost to a tick right here, and with the right time of day. So now we're just paying attention. We already took out the Asia highs. We already almost hit the high of the day zone. So right now, it's pretty realistic expectations that we've hit the low and the high from a statistical standpoint based off of what Asia variables gave us and what London variables gave us, right? For us to sit here in a complete ranging day, right? Because the move already had happened for the average 10-day range, right? So, like, I'm at this point, like I'm in scalp mode, right? 5 handles to 25 handles, right? If I was trading that way this quarter, but I'm not, right? So we took out that low, right? Now we're going to pay attention to this 930 price, right? Oh yeah, another thing, while this is happening live, even though like we put this right here at 5:30 to 6:30 in the morning, as it's establishing, I'm moving this up. Like I'm not, guess what? I'm not too proud. Like I move this to where it needs to go based off of where price is telling me. Because the point of this is to tell me from 7 to 11:30 over the last 21 days, I'm expecting a 1% move. So does it make sense for me to keep this down here after 7:30? No, it's going right there on that low and being anchored as this whole move's happening. Just like if it was coming down, I would anchor this top to the bottom top of it, right? All right, so now, and I don't even know what happened today because I wasn't paying attention. So this will be the first time I'm seeing it. Right, new hour open. I'm focused. We're at the 930, so that's 1 hour, 2 hour in the 930, right? So now I'm seeing, can we get above the 930? Can we get above previous hour highs, right? No, we cannot. Right, we come back down, we test that low of the day zone again, right? We do that at 1109, right? Make a low. Remember I told you guys a couple of streams ago, right? When I'm considering, let me delete or hide all this, from 1800 to 930. So I'm on the 10-minute chart. Every 10-minute low and every 10-minute high has a high probability over the last 2,000 days to get in return to, right? I'm going to say on the 15-minute chart, every 15-minute candle from 915 all the way to 1800 has a high probability of being both sides wiped out over the last 2,000 days. Every 5-minute candle from 1800 to 08-ish, we'll say, has a high probability of both sides being wiped out on the last 2,000 days. How do I know this? Because I have the data for it. So your job is to play the firecracker, is what I call it. All right, moving back to this. So now, at this point, besides this 730 price, every single high and low from 1800 to 08 has been taken out besides one. And why they have a high probability is because New York does stuff like this. I just gave you guys a trade plan. All right, so now Well, at the back end of the 11 o'clock hour, we've already stepped over the midline of this hour, over the 5-9 bounce, found footing right here, and now we're seeing, can we get above the 930 and the previous hour mid, right? Paying attention, right? 12 o'clock, new hour opens. We know that from 11 o'clock to 1300 have a high probability for the RTH of retracing itself back and forth, just like 6 to 8 does. I'll leave it at that, right? All right, now that the 12 o'clock hour is over and we moved a good 5 handles, we know that we're coming out of this time frame where we go down, to go up, to go flat, right? This is a historical thing that happens during these 2 hours, right? Now we're paying attention. We're starting a new hour. We're above this hour's midpoint. We're going to pay attention. Do we continue higher, et cetera, et cetera? And we've already spent 1, 2, 3, 4 hours in the 930, right? So if we look at our playbook, a range is defined by pushing away from the 930 and reversing between 1145 and 1345 and returning to it, or we test the 930 4 or more hours in the RTH. So we know that for the RTH, we are in a range day and need to trade it as such, right? So now we rely even heavier on these 5-9 boxes, previous hour mids, and previous hour highs and lows. We've stepped above this hour high. We know that we're in a range, right? And now we're stepping below, or we haven't stepped below, we're actually doing a haircut, which is explosive to the upside. All right, now we've stepped below, and now we're expecting some rejection here, or this is the rejection on previous hour midpoint in the 930 price. And we can see that this was the rejection off of the previous hour mid and the 930 high. New hour opens, right? We're above the previous hour mid, and we're seeing if we can take out this previous hour high and head higher. 1, 2, 3, 3 hours up. Testing. All right. Testing the 930 again. All right. So every single hour in today's trading day for the RTH has touched that 930. This one, we took out the low. We stepped above the 5-9 box. We stepped above previous hour 50%. Come down, test 5-9, and go higher. And that is the day, right? And that's how we incorporate statistics for today with actual average ranges from the last 10 days into a trade plan. That's how we did it today, right? We didn't meet this. Well, actually, let me play it out to 1615 to see if we did. No, I don't think we did. Nope, we didn't. So this one lacked about 0.20% of its actual distribution between 1130 1600. Actually, 1130 is down here. This is the 1130 candle, so this is the low. We did meet it. So 1600, we went a little bit above it by 1615. So why do I do this? This puts realistic expectations on my chart, right? This puts realistic probabilities on my chart. So when I am making decisions around my trades, right, with live price using these arrows in the 5-9 boxes and 930, right, I know what to expect. This is aligning live price with historical data. I am not a genius, dude. I'm an infantry dude. I'm probably one of the... I just know this because me and Jimmy and Stoic Trader and Pickle Teaches FX, we got sick of listening to people who wouldn't trade live accounts in front of us, and they would just spit theory at us, and we just started building our own systems with our own knowledge, our own back tests, etc., etc. But thank you for the compliment. I've never been called a genius before. You guys are trading your capital. Nobody else is trading your capital. You work really, really, really hard for that capital. Just to throw it away by gambling in these markets or by following people like sheep. You guys need to do the work, right? You don't have to do it exactly how I do it. You don't even have to do it like I do it. But you need to do something that's a repeatable system because we all have different experiences. You know why I built my system like this? Because I spent 20 years in the infantry fighting bad guys. Now, do you think I just picked up a rifle and fought bad guys? No. Like, we did reconnaissance on them. We pulled every type of intel on them. We studied them. We rehearsed every move that they could make, how we were going to respond. That's the historical data part. And then when it was time to hit the house at 2 o'clock in the morning, like a well-rehearsed ballet with emotional intelligence, the live price of trading, right? We had already rehearsed and prepped everything. So if we took a casualty, they could throw the kitchen sink at us with the water still on, dollar soap still dripping, and we'd still perform what we rehearsed, right? I can't emphasize enough how important it is, you as the trader, to figure out what works for you. Me and Mr. 930, Jimmy, like, we've been doing this together for a long time. We don't trade the exact same, right? But yeah, hopefully this helps. And just so you guys know, like, if you missed it, I posted a thing. Right now, what I'm doing, let me see, no. There we go, right here. 3 videos, right? These 3 videos are the first 3 steps I do every single day, right? And this is a swing trading strategy, right, that I incorporate before I even put one statistic on my chart. Go watch them, right? You can do this one like Oliver Kell does with moving averages. I use previous month 50% in NFP Friday. Why do I do that? I've been trained by Oliver Kell. He won 941% in the Equity World Trading Champion in 2020. He one-on-one mentors me, right? Why did I not use his EMAs and his price action? Well, because I see intraday with 5-9 boxes in previous hour 50%, right? I still understand the concept of momentum, but I had to build something myself, right? Just like it took him 5 years of being not profitable to figure out how he saw the market the best, right? So hopefully this helps you guys. Thanks for all the love and support. Thanks for not being trolled.